Hi friends, so in this video we are going to discuss 5 important MCQs on the securities market, and the topic for this video is going to be SEBI ICDR regulations, and this is going to be a very important topic for the upcoming SEBI Grade A 2018 examination. Now before directly jumping onto the questions, let me quickly tell you about the courses which we are presently running for SEBI Grade A 2018. So we are offering these courses. You can avail the course for Security Market Phase 1 and Phase 2, or you can also choose the Phase 1 mock test along with this Securities Market course, and there is this full course for Phase 1 and Phase 2 of the SEBI Grade A. So you can choose as per your requirement, and also you can avail attractive discounts by using the codes given below. Now, in order to channelize your preparation in a better way and in order to prepare you for all the related competitive examinations in one go, we are also providing some combo courses for SEBI, RBI and NABARD. So you can choose the combo courses also if you are preparing for all these examinations. Again, you can avail discounts by using the discount codes mentioned here. So let's start with the first question. SEBI issue of capital and disclosure requirements regulations, that is SEBI ICDR regulations, they were issued in which of the following years? Options are 2006, 2009, 2013, 2017 or none of the above. So we have to identify in which of the following years these SEBI ICDR regulations they were issued. Now, management of any public issue in which the company is issuing the shares to the public at large, it involves a large number of activities which are to be done and they need to be coordinated. Also, there are a large number of agencies like underwriters, merchant bankers, etc. which are involved, and all this they have to be combined together. All this effort has to be coordinated, and for this purpose there must be some rules which must be there in place. Now, in order to provide for this, SEBI first issued a compendium titled SEBI Disclosure and Investor Protection Guidelines 2000, and they contained detailed guidelines, circulars, instructions, etc. relating to the issue of capital. So when the company was to issue capital, when the company was to issue shares, it had to comply with these kinds of guidelines, and they were made effective from 27th January 2000. However, on August 26, 2009, so after 9 years, SEBI rescinded the SEBI DIP guidelines 2000. So SEBI, it did away with these SEBI Disclosure and Investor Protection Guidelines 2000, and it notified a new set of guidelines, new set of regulations called SEBI Issue of Capital and Disclosure Requirements Regulations 2009. So that is how this SEBI ICDR regulations it came into being, how these regulations they were born. So we have to remember that these regulations they came into effect in 2009, and they replaced the SEBI Disclosure and Investor Protection Guidelines of 2000. So friends, now we can easily answer this question that SEBI issue of capital and disclosure requirements regulations they were issued in 2009. So the correct answer will be option number B. Let's move forward. In the case of an initial public offer by an unlisted company, if the issue price is less than rupees 500 per share, the face value shall be. Options are less than rupees 10, rupees 10, more than rupees 10, rupee 1, or none of the above. So this question is asking about the issue price and the relationship of it with the face value in terms of the provisions of SEBI ICDR regulations. Now the issue price is the price at which the shares they are being issued by the company, and it will be higher than the face value of the share. So face value will be the price which is printed on that share, and it can be any amount, but the issue price it is generally higher because a premium is charged by the company over and above the face value for issuing these shares. Now, in case of an initial public offer by an unlisted company, these are the provisions which are relevant as per the SEBI ICDR regulations. So if the share price is less than rupees 500 per share, so if the share which you are issuing it as a price which is less than rupees 500 per share, then the face value shall be rupees 10 per share. So if the issue price below 500 per share, the face value shall be rupees 10 per share. However, if the issue price is fixed rupees 500 or more, so if the price is higher, then the issuer company can issue the shares at a face value below rupees 10 per share, subject to the condition that the face value shall not be less than rupees 1 per share. So if your issue price is less than rupees 500, your face value shall be 10. But if your issue price is more than or equal to rupees 500, then you can issue the shares at a face value below rupees 10, but it shall not be less than rupee 1 per share. Further, it may be noted that this condition is not applicable to IPOs which are made by certain categories of persons like government company, statutory authority or corporation like LIC is there, or any special purpose vehicle set up by any of them which is in infrastructure sector. So for these particular sets of persons, these guidelines, they are not going to be applicable. So friends, now we can easily answer this question that in case of an initial public offer by an unlisted company, if the issue price is less than rupees 500 per share, the face value shall be rupees 10. So the correct answer is going to be option number B. Now let's move to the next question. The issuer company in consultation with the merchant banker shall stipulate the minimum application size in terms of number of specified securities falling within the range of. So it is asking the minimum application size should be in the range of. Options are rupees 10,000 to rupees 15,000, rupees 10,000 to rupees 18,000, rupees 12,000 to rupees 16,000, rupees 15,000 to rupees 18,000, or none of the above. So this question is asking whenever the company comes up with a public issue and it invites the people to subscribe to that particular issue, what should be the range in which the amount must be paid by the persons who have to acquire the shares of the company. Now this minimum application value is the value with which the investor has to minimum invest in the securities. So whenever a company comes up with an IPO, the investor must buy the shares worth this minimum application amount. Now as per the SEBI regulations, this minimum application value shall be within the range of rupees 10,000 to rupees 15,000, and the company which is issuing the shares shall fix this actual limit in consultation with the merchant banker, and this limit will fall in this range, and it will also make important disclosures in the offer document of the company with regard to issue of securities. So now we can easily answer this question that the issuer company shall stipulate the minimum application size falling within the range of rupees 10,000 to rupees 15,000. So the correct answer is going to be option number A. Now let's move to the next question. In case of an issue made through book building process, the issuer may make a reservation on competitive basis out of the issue size, excluding promoters' contribution and net offer to the public in favor of employees, shareholders of listed promoting companies, issue management team members. And the different options, they are 1 and 2, 2 and 3, 1 and 3, all or none. Now to answer this particular question, we must be aware whether any reservations can be made for any set of persons when the company comes up with a public issue. Now the answer to this is yes. Now the company can reserve the particular amount of shares, a particular percentage of shares for the following categories of persons. So these persons, they include employees of the company, shareholders of the company, debentures board holders or depositors who have subscribed to the services of the issuer company. So these are the different persons for which the reservation can be made in case of a public issue made through book building process, and this reservation is going to be on competitive basis. So it means when allotment of shares is made in proportion to the shares applied for by the concerned reserved category. So if the shares for which the employees they applied for were of 1000 shares, but the actual number of shares which were being issued by the company, it was only 800. So they are going to be allotted shares on a proportionate basis, and this is known as a reservation on competitive basis. So friends, now we can easily answer this question that in the case of an issue made through book building process, the issuer may make a reservation in favor of employees and the shareholders of the listed promoting companies in the case of a new company, but no reservation can be made for the persons who are managing the issue of the company. So answer to this is going to be option number A, that is 1 and 2. So now let's move to the next question. in the case of an issue made through the book building process as per regulation 26(1), the correct allocation in the net offer to public category shall be not less than -% to retail individual investors, not less than -% to non-institutional investors, and not more than -% to qualified institutional buyers. So we have to fill in all these dashes, and the options they are given as 35, 15, 50, 40, 30, 30, 20, 40, 40, 30, 20, 40. So to answer this particular question, we must be aware about this regulation 26(1) and what is the amount for which the reservation is to be made. Now if we look at the regulation number 26 sub-regulation 1, then this regulation deals with the listing of the companies. Now as per these regulations, there are some criteria which has to be specified by the company, and this includes net tangible assets of at least rupees 3 crores, minimum average pre-tax operating profits of rupees 15 crores, net worth of at least 1 crore in each of the preceding 3 full years, aggregate of the proposed issue and all previous issues in terms of the issue size does not exceed 5 times its pre-issue net worth. If it has changed its name within last 1 year, so if the company has changed its name within the last 1 year, at least 51% of the revenue should be from the activity which is indicated by the new name of the company. So these are the different sets of features and regulations as per regulation sub 26(1). And also at the same time, we have to remember that if the companies that do not comply with these regulations, they automatically fall in the regulation 26(2). Now in the case of an issue which is made through the book building process as per the regulation 26(1), so if the company was able to comply with all the conditions specified in the regulation 26(1), then the allocation in the net offer to the public category shall be at least 35% to retail individual investors. So retail individual investors, they can get up to 35%, and non-institutional investors, so they are going to get not less than 15%. So these are the intermediate categories, and for qualified institutional buyers, we can issue not more than 50%. So this is the maximum limit for the companies who have complied with the regulation 26(1). But if the company did not comply with the regulation 26(1), they would fall under the regulation 26(2). And if the company is falling in this section, then the company has to comply with the following norms for allotment of securities, and then not more than 10% to retail individual investors. So maximum 10% amount is to be allotted towards retail individual investors, and maximum 15% for non-institutional investors, and a minimum 75% for qualified institutional buyers. So now we can easily answer this question, that in case of an issue made through the book building process as per regulation 26(1), the correct allocation in the net offer to public category shall be not less than 35% for individual investors, 15% for non-institutional, and 50% for qualified institutional buyers. So friends, this was all about our discussion on some of the very important MCQs pertaining to the securities market. And if you have any query or you wish to know more about our courses, you can visit our website, which is www.edutap.co.in, or you can drop us a mail at hello@edutap.co.in, or you can call us at 8146207241. So friends, if you found this video useful, please like the same, share it with your friends, and subscribe to our YouTube channel. And if you wish to get regular updates on Telegram, you can subscribe to our Telegram channel, the link of which is given here as well as in the description to this particular video. And subscribing to our Telegram channel is also going to help you fetch the PDFs of all the discussions which we are doing on YouTube. So thank you friends.